All right, guys. What I'm about to share with you right now is so freaking exciting. When I tell you, like, you're not going to believe what lending instruments are out there right now that will help you solve your capital problems. You're just going to be blown away by what we're about to share with you. You're not even believe it's even real. So before we get into it, raise your hand, or nod your head. I can see you out there in YouTube land. Raise your hand or nod your head if you have done a construction project or a massive renovation project, and your senior lender came to you last minute, and went from 65, 70% loan to cost to 55, 60, 50. Yeah, raise your hand. It's 2024, 2025. Yeah, this happens. Also, raise your hand if you have actually done a great job on a repurposing a project. You made it beautiful. The post-completion appraisal did an amazing job, and you have all this equity built in. Cash flow is fantastic. And you go back to your senior lender and they go, "Hey, can I go access some of this capital I just put in this thing?" And they went, "No." Yeah, exactly. So what we're going to talk about today is solving two of those problems. And before we get into Nicole here, so I want to introduce Nicole Robin, who is my friend and CPACE expert. But before we get into like her background and what all this stuff is, let's just get to like the meat of this thing, Nicole. Like, give us an example right now, like something you've like closed recently or working on that gets you excited, that kind of showcases the power of CPACE lending and how it can help our listeners.
All right. Hi, Billy. Thanks for having me.
Hi,
Hi. Okay, so how about can I give you two examples? Because I thought of another one.
sure,
Uh,
go right ahead.
okay, two good examples. One is we did a project. We provided C-PACE financing to a project in Chattanooga. It was new construction industrial. And
Okay.
they were about 80% complete, and they had some cost overruns because that happens these days. Like,
No, not in this world.
ah,
Runs, yeah.
so cost overruns, and they were engaging their tenants. They were getting signed LOIs, signed term sheets, and they needed a pretty big, hefty tenant improvement reserve account. And the bank, the construction lender said, "We're done. We're not lending you another penny." And so they came to CPACE. It was perfect. We actually helped finance those cost overruns. And
Wow.
then we put a $2 million reserve account at the senior lender's bank. So they increase their
Boom.
deposits. And
Yeah.
then that's what's going to be tapped into instead of equity to do the tenant improvement reserve or tenant improvements. And so it was perfect. We came in at 80% complete, plugged that hole, and they're now complete and up and running. But that's a good use of
The,
space.
so this client right here would have had, without CPACE, would have gone back to their equity partners to go pony up more
Yes,
money, which that's never fun to go have a capital call for your equity investors. But with this, they were able to access lending. It made the senior lender happy because deposits right now are very, very valuable, and everybody wins. And just before we
correct.
get into this, we'll tease this a little bit. Go second one. Like I'm so excited about like this the instruments thing because I can nerd out on this thing.
Okay.
So what's the second one? So
Okay, second one is something that we're closing on right now. It's multifamily. It's in
okay.
East Tennessee, new construction. Crazy story. The half owner is also the GC. And somehow, when he put out the construction bid at the very beginning, he only budgeted for 98 units instead of 108.
Wow.
So they
Okay.
kind of went in and got their construction loan, raised their equity, and missed 10 units.
Oh goodness.
Um, yeah. And so cost overruns also. The bank is maxed out. The bank doesn't want to give another penny because they're actually internal restrictions. They have hit their limit with this particular borrower.
Mhm.
They love the borrower. They don't want to refi and get taken out with another bank that can do everything. So PACE is coming in to finish the construction and finance those 10 extra units. And they don't have to go out and raise more equity or go find a whole new lender. The bank is very happy to stay in the deal. We're happy to plug that gap. And construction will be done probably this fall.
Yeah. That's amazing. I mean, there's like things happen in real estate. It's like Murphy's Law. Like things happen. I mean, there's so many components to this thing, but especially the banking side and the lender side, I mean, you have a great borrower, you can hit your aggregate limit very, very quickly, these guys. And with
Correct.
the pressures from, the Fed and the banking, bureaucracies to make sure everything's, buttoned up, especially right now. I mean, they've really got to watch their P's and Q's and balance sheet. So this is fantastic. So let me tease this a little bit. Let's say what CPACE is, but let me just share a little bit of teaser about the benefits of PACE lending and what this is. So just like when I say this, people, you're going to be like, what the heck just happened here? Is this like 2008? No, this is not, this is not even close to it. So first off is CPACE will finance most of the improvements. We get into like what they're good for. They're going to be in second lien. Actually, not even second lien. It's not even a lien. It's a lien on
We
the
don't even take a lien position.
you
We
take a
don't
lien
take a lien
position. Like
position.
it's the senior lender still a senior lender, and like this is not even like a lien necessarily. So you get that. Plus, it's non-recourse, and the ability to go get creative with the structure and payback structure is phenomenal. You can go from even like 3 years interest only to even 3 years deferred payments, depending on the size of this thing. So think about this: if you're someone that's improving a project, either go refinance or sell, what you can go do. So just like think about this as we're talking through this. The other benefits of this, if you're going to sell it, it can be assumed. It's actually not saying this. I'm using assumed, lightly there just to get your head around it. Nicole's going to walk through a little bit more of this, but talk about saving the capital stack for your future buyers as well. So this is phenomenal. Okay, so that's teased you up there of like solving some massive capital gaps in the marketplace right now because who the heck wants to refinance a loan you just got? And anyway, so let's just start with this. So Nicole Robin with Petros, and let's just start with what the heck is CPACE and PACE? Like, what is this? What is this thing? You told me about this like a couple years ago, and I'm like, what? And I had to go do some really serious research, and then all of a sudden now it's like more and more common. So just what is it and what isn't it?
Okay. So it's only been around about 15 years. So it's a new product,
Yep.
and it's only been in Tennessee for about 3 years. Actually, the state had to pass legislation to let CPACE lenders come in and close on financing. So it stands for commercial.
Yep.
That's only commercial assets,
Yep.
property assessed clean energy.
Okay.
And so the clean energy means that we can only finance only about 30% of a new construction or an acquisition rehab project. We're going to finance the building envelope, roof,
Okay.
insulation, windows, doors, lighting, plumbing, and mechanicals. So we're
Yep.
just a piece of the capital stack. We're up to probably 30% LTC, but we're debt. It's a
Yep.
debt product. So you do need to plug in your debt service to your pro forma. Make sure you have good coverage. Just because you want more debt doesn't mean your pro forma will allow for it.
Yep.
But we can help bring, like, if you're only getting 55% LTC offers out there and you want another 10, 15, 20% debt, PACE could be your solution.
Yep. It's
And
not it's not going to
yeah,
replace the sponsor's equity at all, and it's not necessarily going to replace Mez if you have to go that route. But it's kind of blended in there. So just for those people like watching it and say, "Oh, I don't have any of my own money in." Yeah, you still have to have your own money in there. So don't get too excited about that. This is kind of like that. Let's say the gray area, but it's kind of the tweener. So keep going.
yes. Yes. So yeah, I definitely have phone calls for multifamily that say, "Hey, I'm only getting 75% LTC. Can I plug you in for 25?" No. Like you still need equity in the deal, at least 10%, but most banks and, PACE lenders want more than that. But it's just a way to get more debt. If you're not getting enough debt or you're in the middle of construction, cost overruns, or you need to pull a little equity out after construction, PACE could be a really great solution. It's a loan product. It's a debt product. We can give up to 25 to 30-year term, and people
Wow.
really like that. So we try to get that P&I as low as we possibly can. But what's unique, and I should just throw this out there right away, is the property assessed part. Instead of taking a lien position or doing intercreditor agreements, we actually go and file the loan amount as an assessment tied to the property. So we see the building as the borrower, and that's why when you sell it, you could keep it with the property if you want. It's assumable, and that's why it's also non-recourse. So there's a lot of benefits, and people in Billy, I might as well just say what the interest rates are because I bet
Yeah.
some of your listeners are like, "Oh, this must be a really high-priced product." And very pretty low fees, and then our interest rate is around 8% right now. It's a
So you
spread
guys,
on the 10-year treasury.
so yeah, I was gonna say like, what's what's the index there? So it's 10-year treasury,
Yep,
and for those, like, depending on when you watch this, depending on what it's going to be 10-year treasury plus, probably 400, 350 or 400 basis points,
correct.
somewhere
You're
around
right.
there. So
That's right.
hopefully interest rates are going down in 2025. We've been promised that for a while, but if it's 10-year treasury, you really don't know. But for those that are watching at home, go and do that. I want to step back into the property assess part because that is like the cool part of going, wait a minute, I can tie this to the property records and the property is the borrower, which kind of makes sense because I'm improving this property. It's like the improvements stay with it. It is efficient, is more efficient because of what I put into it. Like it should, why do I have to go guarantee that? So that's the most amazing part right there. So um, let me so people can understand this. The the team that does all that is you guys, not the borrower, right? Like
Correct.
that's something we already hired the lender for and to go do. You don't have to go down to your local tax authority and go, hey, I'm gonna go file this thing. Like, no,
Right.
we're just gonna do that for you. So don't have to worry about that. Um, all right, so we talked about the capital stack here, and we talked about the cost. What is the timeline for this? What does the underwriting look like, and what's the timeline for this to be able to get this thing from start to finish? And then obviously, when do we need to talk? So, like,
Yep.
when do the borrowers need to talk to obviously broker or CPACE lender, Nicole?
Yes. I love it. So we like to be brought in as soon as possible. So if you're thinking about acquiring a building and doing an acquisition rehab, or you're doing a new construction, and you're literally in the process of putting your capital stack together, and you're out talking to senior lenders, and you're realizing you're only getting 50, 55, 60, 65% LTC, and you're like, but I really want a little more debt. Call us right now. Now's the time. We do not take longer than a bank to close. We literally do the exact same underwriting as a bank,
Okay.
same closing process. We love to close on the same day as the construction lender. And we're not, it doesn't take more time to work with us. It's pretty identical to working to a senior lender. And so, from the day you talk to me, I like to say, give us, 6 to 8 weeks to close, right?
Yeah, because you're working parallel with the senior lender. So that's the good thing is like you're not trying to go like, hey, by the way, like the senior lender, we're not like, we got the little thing behind the stack here is like they actually know about you. They actually are excited to engage with you because it makes them look better. And we can talk about that in a second. But it's parallel underwriting, and for those that are new to me and my teachings and newsletter, all that, the documents you need is actually I'll link it in the comments here as far as the documents you need for underwriting. So both for senior debt as well as CPACE or anything else. So I'll link that in for you. It's free, just and some really cool hacks to get your loan closed faster. But so the process, I mean, is parallel. So you're not having to do one and then the other. Like you're doing both of them at the same time. Senior lender's happy. You guys are happy. Borrowers are happy. So what's the catch? Where's the catch in this thing? This seems like one of those like too good to be true, especially when it comes to lending. So what are we missing here?
So I would say number one is, and I mentioned this before, but just because you want more debt and you want to go out and raise less equity doesn't mean the pro forma can support the additional debt. I do get a fair amount of calls where they're already at a 1.25 DSCR with the senior lender. So really you don't have room to put more debt in. So that's kind of number one. Make sure you plug it into your pro forma and you can cover it. And then number two is the senior lender does need to consent. It's a one-page form, and they just basically say, yes, we understand the concept of PACE financing. It is filed as an assessment at the tax assessor's office. It's in line with real estate taxes, and we will consent to this. And so bringing us in sooner than later, just to make sure the bank completely understands the concept and what it means for them as a first position lien holder, the better. But we are finding, at least here in really across the entire country, PACE has been around for 15 years. And then in the last few years, we're just getting a lot more banks understanding the benefit to them, the borrower, the project, and they're consenting. So get us in early. We work side by side. So
And
really, there's no other catches.
yeah, so I
Like,
mean, the scenting part there, that's from you. Like the bank doesn't already know about CPACE, Petros, whatever. That's where you come in to have that conversation with the senior team there to go, hey, here's what's at. As the borrower, or even sometimes we have conversations with the bank as brokers, that we don't have to worry about that. We're not selling this on your behalf. They are, because they have they've been doing this a very, very long time. So, again, take that off your plate. Like, you don't have to go sell and worry about
correct.
this. The only thing you have to worry about is your debt servicing. Make sure it actually still does it. Again, back to, this ain't Oprah. Just because it's America and we're built on debt doesn't mean you actually, constitutionally need debt. It's also not wise, to go get that lean on a project to get under 1.2, 1.25 on a debt servicing. But there are situations where you're doing really good and there's some ability there to go recapitalize without necessarily a traditional refinance. And the senior lender actually kind of likes it, because it helps both sides of it out. So especially when it comes to deposits and liquidity and all that. So
Yeah.
we got all that. So what, I guess that we talked about the pros and the cons and all that. Like, what properties work really
Yeah.
well for this and what properties don't?
Yeah, great question. Um, you know, it's only commercial assets, so that's multifamily, 5 units or more, industrial, mixed use. We're even doing office. We're still financing office. Um, Hospitality is a big one for us. Usually, when the senior lender doesn't put in as much of that construction financing as you wish, that's when PACE could be a good fit. The other thing is you could have a building, and I'll mention another use of the PACE financing, and the building needs a whole new roof or LED lighting, some sort of kind of big rehab that includes these energy efficiency items. And you don't even need to go to your bank. You could just come to us and we'll literally finance all those items at, 100% of the cost. So that's another use. And
Before
then,
we Let me touch on
yeah,
that one real quick. As far as
yeah,
people that are listening to this thing actually have commercial buildings, retail, office, whatever, that need a facelift for like tenant improvements. This is, if you're the owner of the building, you can go do this. So instead of going to your bank and going, hey, I need a loan for a TI package for this, they're going to pay me back or whatever. Whatever the lease structure that you've agreed to, you can actually, as the owner of the building, use CPACE to go make the property more efficient, and
mhm,
you don't actually need another loan, traditional loan from a bank. So
yeah.
just keep that in mind, especially if we're doing, some bigger rehabs, bigger projects, bigger facelifts. Let's say all the improvements will qualify, but like Nicole said, 20, 30, 35% of those improvements could qualify. So save you some
And
cash.
yeah, and really, and I use that 35% number really on the total development cost of an acquisition, rehab, or new construction. But if you came to me and you're like, hey, I need a whole new roof insulation, I'm going to put in new windows and doors, and then we're going to just change all the lighting and we got HVAC, I could finance 100% of those costs in that situation. So not that 35%, because all of that would be eligible.
Wow.
So it's a little confusing, but when you do a ground up new construction, only about 35% of those costs are the building envelope, lighting, plumbing, and electrical. Yeah, lighting, yeah.
So for
Makes
the documents you need to go review this, I mean, obviously you need to have plans and budgets in place, which is huge because you need that to get approved for a senior lender as well. So it's the same documents that senior lender is going to need. You're just going to float it through to Nicole and go, all right, well, here's the list of what we're going to go do. Here's the budget, all that. And she can quickly, and her team can go quickly go and, 100% yes, no, whatever, and come up with a number that they can go finance for you in terms. And it's not, I mean, you're pretty, I'm not gonna promise like how quick you are, but you're fairly quick at turning around term sheets and offers for people we've sent to you with that information in a couple of days, and you've got it. And that way you can plug it in. You're not waiting weeks or months to figure out if it's gonna work or not. You're doing it pretty quick.
Yeah, thanks. Yep, we do. And then Billy, there's one more that I would love
Okay.
to mention is the look back period.
Okay.
So if you have installed, uh, the lighting, the mechanicals, the building envelope within the last 2 years in Tennessee, we can actually go to closing and pay you back for
Wow.
those improvements. In some states, it's a 3-year look back. So across the country, it's different. I think Kentucky's 3 years. We're 2 years. So let's say that you had like you just put in tons of equity. You didn't mean to. There were cost overruns, and you ended at a 50% LTV loan, and you're like, I actually want a little money back for all those improvements. If the pro forma will allow for it, we could go to closing and cut you a check and pay you back for those improvements. So
Yeah.
that's another thing that we're seeing right now. And it could be a mix of like a little equity back and then also that reserve account. There's a variety. Take down your construction loan a little bit, lighten the load on that kind of P&I that's due to that construction lender, because we give up to 3 years of a capitalized interest.
Yeah.
Well, that's getting in the weeds, but you get what I
That,
mean.
yeah, I think it's the weeds. That's the thing I want to touch on here for people like that are listening in. So this is a mostly nationwide lending program. There is a lot of opportunity there, especially when we talked about recapitalization, look back. Um, especially stuff that you put in the last 2 or 3 years. If you just, you've probably started your deal in 2020. Overruns high 2020, 2021. You finally got it done, and all of a sudden, like, okay, now we're stabilized all that. You can actually look back, recapitalize, put some money in the bank, pay down the loan, or use that money for really whatever you want to. It's really unrestricted. You still have to work with your senior lender on that, but you're still good there. But it has to pro forma. You're still having to underwrite. It's a loan, but at the same time, the creativity of like, hey, we can actually do, capitalize some of that interest over 1, 2, 3 years or interest only, so there's flexibility there depending on your exit strategy with your senior lender and your overall project strategy. So that's something that you guys think in mind. It's like don't just like think it's like a one box type thing. The same McDonald's, you actually can, it's the Burger King stuff. You can kind of have it your way. So, all right. So what we're at the end here, Nicole, like what is so we talked about industrial is good for this, multifamily, retail office, and then hotels are really good too. So what other assets will this work for that people need to keep in mind that to think about?
It's really any commercial asset.
Yeah,
So I mean, we'll even do churches in some
yeah,
situations. And so, yeah, any commercial asset.
yeah. Yeah, so that's even owner occupied too, right? I mean hotels kind of
Correct.
considered owner occupied as well. So it's not just for real estate investors. Like if you are a business owner, and you've improved your property, industrial or whatever, you've grown because that's like everything's growing, Middle Tennessee and other places. And even you've put money into your property, you can pull that back out. So think about that, and then let's end. Well, I'm not getting to the weeds on this thing, but we'll in the show notes. We'll have the all the details there, how to reach out, just like the basic stuff. I mean, every person out here, every deal is going to be specific, so you just have to email some basic stuff. We could get back to you really quick on if it's going to work or not, and then how much. and just let you decide if it's going to be a bit fit or not. But there's lots of opportunities not only with Petros, but also some smaller, like even pathways. We're not getting the pathways here for like Middle Tennessee and Nashville, of really being able to help small businesses and the smaller owner operators with financing of improvements, especially green improvements, energy efficient improvements. So that's something you guys keep in mind. It's not just a one size fits all. Like, oh, we have to spend $1 million on improvements. No, there's smaller stuff out there. So just remember that. So all right, any last parting words, Nicole? We got two in the weeds here, but like, what's any last parting words?
Billy, you know this product super well. Thank you for everything. Like you nailed it. I would just say if anybody is curious, they should reach out. And pretty quickly, you and I could say whether or not there's a good fit here very quickly. So I say reach out. That's my
Yeah.
parting one.
Yeah, just reach out. It doesn't hurt. Just the basic the information we'll need. We'll throw in the comment section with the email address. And it's just an email, so we're not going to pull credit, nothing like that. So, yeah, we can let you know pretty quickly. So, with that, that is the high level view of CPACE lending, aka the magic loan product out there. No, I was kidding, but it's really cool. Um, so, with that, we'll say goodbye, Nicole. And guys, thanks for watching. And reach out with any questions, and especially any opportunities we can help you with as far as lending. So, see ya.
Sounds good.